Software stocks have lagged the overall market in 2022, but a summertime rally is putting them right back in the mix of growth stocks to watch. Autodesk is one software player seeing a strong rebound. Shares of the company, which designs software and tools for project workflow, have climbed more than 30% since hitting a low in mid-June. And after delivering strong second quarter results, what does Autodesk's performance signal for the company's future growth and the software sector comeback? Well, joining me to break down recent earnings and where the sector is headed next is Andrew Anagost. He's the president and CEO of Autodesk. And Andrew, it's great to have you here. A strong quarter for Autodesk. Revenue is up 17% year over year. And I want to get your reaction to the latest numbers. Hit us with the highlights here. What stood out to you from this quarter? And what do you think that performance signals for the rest of the software industry as a whole?
Yeah, I think the big headline here is consistency. One of the great things about Q2 is it looked a lot like Q1. And that's really what the investment community and lots of people, including me, were looking for. We were looking for consistency. Were there signs of increasing softness within the market? Most of the people in the software sector have already kind of looked forward into their business and they accounted for some of the uncertainty we're already seeing. But the consistency is really an important signal to everyone about the business and about where the economy is going.
Right. And in terms of demand for software from firms in the various end markets that you work with, what are you seeing there?
Yeah, the buzzword is backlog. All right. A lot of our customers have fairly significant backlogs of work. If you look at manufacturing, they can't deliver products fast enough, so they have a large backlog of orders. So they're still buying software in order to kind of either streamline their operations so they can be more effective at fulfilling that backlog as supply chains open up, or they're preparing to fulfill the next set of backlog issues. That's true in the AEC market as well with the built universe. And people are waiting for the infrastructure bill to start lighting up. So what we're seeing with departments of transportation in the US is they're reevaluating their software environments and trying to get ready to spend as efficiently as possible with their piece of that infrastructure bill in the US. So backlog and preparing to kind of push through that backlog is a really big theme in our end markets.
And in terms of your verticals, zooming into the construction solution vertical, because Autodesk has, pretty significant exposure in that area. How has the rebound in that industry affected any sort of revenue or maybe pricing considerations, or how is that really playing into the overall future outlook for you?
Yeah, so our construction business grows about twice as fast as the rest of the business, roughly about twice as fast. So it's in a robust growth mode right now. And that end market is really looking to invest in digitization for its future. As you probably know, construction is not a heavily digitized industry. It's got lots of inefficiencies. And what they are looking at as they look out to their 5-10-year horizons is more competition for labor. So tighter labor pools. They're already seeing tight labor pools now. They're seeing more restrictions on how they build, how much waste they can produce at a construction site. They need to digitize. So what we're doing is we're investing and continuing to invest in that space because the growth is there. And we expect to continue to see that growth as the next 5 or 10 years play out.
Yeah, and as you know, consumers as well as businesses have been grappling with rising costs. Inflation is near all-time highs. We've seen some Fed moves to try to contain that. But I'm just curious, are rising interest rates affecting the business? And if so, how?
Yeah, interestingly, we're not seeing any impacts on our business from rising interest rates. I think it's also important to remember that we're coming off historically low interest rates. So what we're kind of getting back to is kind of a normal. So we're not seeing any impact from the interest rate environment in our business. And I'll go back to that theme of backlog, right? A lot of our customers are working through backlog, and all that backlog is unaffected by the current interest rate environment. Certainly the inflationary environment passes a lot of the costs down to our customers, but not the interest rate environment, at least not yet.
And, you mentioned consistency, and Autodesk has consistently delivered double-digit top and bottom line growth for several years now, despite operating in such a cyclical business and end market. So how is Autodesk able to deliver such steady growth?
Yeah, a big part of it is one, we're not as cyclical as people think we are, first off, because the industries don't always move the way people think they do. Two, we're now a subscription business. So when you're a subscription business, you have a much more reliable revenue stream. You have a much larger renewal base. We add lots of new users because subscription prices cost less upfront, and we bring a lot of people into the ecosystem. So that contributes a lot. But also, we're a highly diversified company. We deliver engineering and software solutions to manufacturing, to the architecture and engineering space, to the media and entertainment space. And these spaces don't all go in the same direction. When the AEC space was having problems, manufacturing tends to do great. When manufacturing is having problems, the built world tends to do a little bit better. This geographic and vertical distribution of our business, combined with a subscription model, makes us a pretty resilient company through lots of different kinds of economic shocks.
And just to wrap up, are there any other trends that you're seeing near term that, might play into Autodesk performance and maybe the software industry as a whole?
Yeah, the good news is we basically looked ahead, and we feel like we've got our guidance, and our near-term outlook captures anything that could happen right now. If you ask me what I keep watching Europe, keep watching China. Any deterioration in Europe is something that we're all looking for. It's the big uncertainty. Is the war going to resolve itself? Is it going to escalate? Are energy prices going to continue to increase in Europe? Could the euro weaken even more? These are kind of the sources of uncertainty. That, and is China going to bring its economy back online in the way it was pre-COVID, or are these lockdowns or other tensions inside of China going to continue to put pressure? These are the uncertainties we watch. Fortunately, we've baked all that uncertainty into our guidance, so we feel confident about the near term. But I think everybody's watching these same things.
Well, Andrew, thank you so much for your insights today. We really appreciate having you here.
Yes, pleasure.
And you can head on over to investors.com for more of our coverage on the software sector. For Investors Business Daily, I'm Alexis Garcia.